Pragati here. Welcome back to my channel. In this video, I would like to share with you what I know about negative equity. Now, we're all aware of what's happening around the globe with old stock markets falling down and with lots of businesses going bust, with increasing unemployment. So all this is creating a perfect scenario for a global recession, and a lot of experts are saying that this is going to be even more worse than the recession a decade ago, 2008 financial crisis. So what this means is a lot of homeowners who are on a mortgage may risk a negative equity because property values, property prices are falling down. So just an example here, let's say you've got a mortgage of 180,000. Okay, right now you've got a mortgage of 180,000 and your house is worth 200,000. So you've got an equity in here of 20,000. So 200 minus 180,000. Let's say the property prices went down 15%, for example. Okay, so now your house, which was worth 200,000, has fallen down to 170,000. So now your mortgage hasn't changed. Your mortgage is still 180,000, and your property price has gone down to 170,000. So which means you are now on a negative equity. You've got more mortgage than the value of the property. Okay, so now I must say I'm not an expert financial advisor or a mortgage advisor, but I do have a master's degree in finance and banking. Before I move on, I just wanted to stress that to you. What do you do if your house or you are on a negative equity? There are a few things that you can do, so it's not the end of the world. Firstly, if the negative equity is not a huge amount, for example, if it was only £2,000 or £3,000 or maybe £5,000 negative equity, in most cases you should be able to solve that problem. Number one choice you've got is maybe just wait for a couple of months. Maybe the prices might go up. If in 6 months time or a year's time the prices might climb up as the economy recovers. So that's one way you can do. If you're not in a rush to sell the property or move on, then you can just leave it there and the property will increase in value, taking you to a positive equity. And the second thing you can do is you can always top up. If you've got a little saving, if you've got a saving of £10,000-15,000, and if your negative equity was shortfall of only £3,000 to £4,000, then you can top up that shortfall from your savings or even gift monies that your families and friends are willing to give it to you. Now the thing is, it's not a problem as long as your mortgage, your mortgage term is there. But it might be a problem if you are towards the end of the mortgage, because this is when the mortgage lenders might be a bit more reluctant or not as easy to renew your mortgage into a new product. So this is where you might need to top up that shortfall before they can actually refinance your mortgage. Okay, so that's that. The other thing you can do is, you were looking at how to increase the value of the property. So if for example, if you've got a garage that could be converted into a bedroom, or maybe a lofty space that you can convert into a bedroom. So by doing that, you're actually adding value to the property. So if your property now is 170,000, but by adding that extra bedroom in the loft or a garage, you're adding another 30 grand on top of that. But now, your property is back to 200,000. So you're adding value to the property, but bear in mind, when you're doing that, there is a cost involved as well, because where are you going to get the funds to do that work? And are you going to lend money for that? Is it a loan? But then if it's a loan, you're already on a negative equity. And if these are secured loans, then of course there's nothing to secure against because you are in negative equity. If it's an unsecured loan, then maybe there's a high interest charge. So just bear these things in mind, if you were thinking to go down the route of adding value to your own property. Some other things you can do is if your house is is a big house, and maybe it is there is a potential of renting each room. If you've got a 4-bedroom house, you could rent each of those room into each of those room as an HMO, house of multiple occupants. Then you could move out from that house temporarily. For example, maybe you can move out into a 2-bedroom flat where the rent is a lot lower, but then you can rent your own property to receive higher rent, which then you can use to pay the shortfall of the negative equity. So obviously, you want to do that only for a short period of time until it's necessary for you. And also it's really important to make sure that your mortgage, the current mortgage lender, is happy for you to do so. During times of great recessions, negative equity is very likely, and it's important to understand what it is. And I hope that was helpful. Now, if any of you are in negative equity, then I do have networks where we got mortgage advisors and financial advisors who may be able to assist. So please feel free to share your thoughts and send me comments or contact me directly if you think there is something I can help you with. So like I said earlier, I'm not a mortgage advisor or a financial advisor, but I do have a degree in finance and banking, a master's degree, and I am sharing this with you through my own research and through my networks of other professionals. Thank you once again for watching, and all the best.